right, we're ready to go now. Everybody can hear. So hello, everyone. Here's the summer session of our speaker series, and we have Andrea from Consumer Credit Counseling Services. So it's also CCCS, so a lot of letters, but I'm sure you guys have heard them before. They've presented via Zoom. They've come into the building. So the floor is yours, Andrea.
All right, well, thank you so much. Hello, everyone. I hope you're doing well today. My name, as Hannah stated, thank you, is Andrea from Consumer Credit Counseling. And we are here today to do a presentation on opening up a bank account, how to, why we could, if we have one, just different ways to manage it, questions to ask, and all that good stuff. So I will try to go at a okay pace so that we stay in connection with everyone. If there's questions along the way, I will try to stop at the end of every section to see if there's any questions in the chat box or see if there's any questions I can answer. So today, what we're going to talk about is why we should have a bank account, or what are the helpful purposes behind it, how to open one, what it might cost to have a bank account, some of the fees that they may charge for certain things, and how to use a bank account the right way. So the first thing I would say is, if we have a bank account, because I know many of us may have bank accounts, many of us may not have bank accounts. I know it really is all different, but like, what do we think of banks? Sometimes, and you don't have to write it down, we can just kind of talk here, but sometimes people get nervous when they are dealing with banking because they might not have control of the money that they make, or they feel that they might not have control over it. And they want to be able to have like money on hand, or they feel like the bank will take their money, or there's like a huge amount of fees. And that's not necessarily true. It's just that we need to make sure that we have a good understanding of how the bank or credit union, which I'll talk about too, that we choose works. You know, many times there's no fees to have a bank account, but there could be fees for certain things if we aren't aware. So those are good questions to ask, you know, if we're considering having a bank account, or if we do, you know, to like look in and see, oh, is that something that's being charged on mine? Because sometimes that's where people don't always have the best feeling, or they can get frustrated or concerned because of that. So it's helpful to know our feelings on it, you know, because it just helps us to get on the same page, especially, you know, that we're going to discuss some options when it comes to managing your bank account, but it's just something to think about. Why do we even use banks, right? So let's answer a few of those questions. A bank is where we can keep our money safe. It's a place to keep our money safe. So if I have money in a bank account, it's not just going to disappear. If I am not using it appropriately, or if I have, you know, money, I'm not keeping track of where my money's being spent, sometimes it goes away because we're spending it. Or sometimes if we've overspent, there could be an additional fee and it can throw us off balance. But it's a place to keep our money safe. So that's just something to think about. Keeping our money under a mattress, that's not safe. If there was something that happened where the money was gone, or there was like a fire or something like that, your money's gone with it, right? So keeping our money safe is a very good reason to use a bank or a credit union. It helps you keep track of where our money goes. So anytime you put money in or take money out, spend money on a debit card, which I'll talk about as well on its own slide, or write a check, you can see the history of where your money's being spent. So that's something I want to kind of keep you aware of, is that it helps us really see where our money's being spent. And that's very important, because when we know how we're spending our money, we know what kind of expenses we have. So when we're planning for the future, we can do that in a good way. Or if we're spending too much money in certain areas, we can see that as well and then figure out how to spend less if we need to. It also gives us the ability to cash checks if we have an account. So if someone was to write you a check for a gift, or for employment, or just things of that nature, you can take the check to the bank and they can cash it and give you cash, or you can deposit it into your account, which means put money in, and I'll get there, without a fee. You know, if someone gave us a check, in many cases, it's hard to just, if we don't have a bank account and you try to cash that, there's usually some kind of fee involved, right? So it gives us the ability to cash checks. It also gives us the ability to have an ATM or a debit card. So it's a card that's attached to your bank account to spend money that way, so that we don't have to have cash all the time. Or if we do want it, we can budget out how much we need and obtain it. It also, when we have a bank account, especially for those of us that are looking to purchase a home in the future, you can't get any kind of a mortgage or home loan without having some kind of a bank account, so they can see money going in, money coming out, and know that we are able to afford it, right? And they can keep track of, like, there's some kind of record of our money. So by having a bank account and managing it appropriately, when, you know, especially when we're working, it will help us to be able to borrow money in the future. So these are a few reasons, you know, why using a bank or having a bank account or credit union is a good thing. When you're choosing a bank or a credit union, there's a few things to consider. First of all, you can have an account at more than one bank or credit union. I mean, you might want to start with where you're comfortable, but that's something to consider. Close to your home, you know, is it close to my home? Is that something that's going to be helpful to me? Is it open when I need to do banking? What are the banking hours? Is it open on Saturday? Is it open in the evening? Is there, some of them are in grocery stores, right? You can go there anytime, not anytime, but more extended hours. Does it provide the type of account and services that I want? Or what else is important to me? You know, what else is important? Sometimes people look for a credit union or a bank depending on, like I said, location or how it's set up, you know, different languages they may speak. You know, usually they have, there's some credit unions that have all different people who speak all different languages to really be able to help us to make that connection. That just kind of popped in my head because there's many, right? But thinking about, like, what is comfortable for me and what can I do, right? So choosing a credit union or bank or credit union that's gonna fit your needs. Are there any questions so far? Am I going at an okay pace? Good, all right, thank you. All right, so let's talk about how to open a bank account. Oh, I didn't see anything in the chat. Well, we're opening a bank account. Oh, I see something. I thought I saw someone typing. Okay, thank you. I'll go a little slower. When we're opening a bank account, we want to think about what type of banking transactions we'll be making. So when we're choosing an account, it's important to think about that. Deposits, meaning putting money in, which again, I'll explain that in a little further in more detail. Am I just opening an account so I can cash checks? Do I want to use online banking, which many people utilize that? Am I opening a bank account because I know I want to borrow money from that bank in the future? Or is it so I can obtain money orders, right? So what types of banking transactions am I going to be making? And that can help you choose the bank or credit union that you want to use. When we're opening or choosing an account as well, or a bank or even a credit union, there's different things we want to consider. So a savings account is basically where I put money into an account. There's no checks that are usually given. Sometimes there's debit cards, but it just depends, which gives you a card right to that account, right? So there's saving features. You get an account number. The good thing about savings accounts is you can earn interest. So interest is basically money that you earn from keeping your money in an account. It's not a lot, could be 1% maybe, but the more money you have in that account, it will grow, right? So if that's, savings accounts are good if you're saving up for something specific. Maybe you want to save for a car, a down payment for a house. Maybe you have tax returns that came through and you don't know where to put them. You don't want to just put them in your everyday bank account or under the mattress. So you leave them in a savings account. So, and then, so that's something to think about. You would also receive a statement on any bank account you have. So a statement would be something from the bank or credit union every month. You could get it online or paper, and that will show you, where your account is or how much like you have in all of the things that you've purchased, like all of your transactions and things like that, right? Checking account is the same thing, is same idea, account number, fees, there could be fees, which we'll talk about. You would still get a statement. The difference between a checking account and a savings account is a checking account is usually where people have their money deposited, and that's the money they use to pay bills. So there's usually checks that are attached. A lot of people, we don't write as many checks as we used to, but you may write one for rent. Probably not a bad idea, so you have a record of that for rent. Some people will write them for like a car loan or whatnot. You can really write it for anything, but it's just important to keep track of those, which we'll talk about. I just mentioning things now because I promise we'll cover all of that. But it just depends on when we're choosing a bank, what kind of an account works best for me, right? So if we're talking about a checking account, which is a very basic starter type of an account, there's many low cost or no cost checking account. There could be ATM checking, right? Where you just have a checking account with an ATM card, no checks, just so you could get money in and out. A regular checking account or an interest checking account. So these are different types of accounts that are offered by banks and credit unions. So it's important to figure out what you're comfortable with, right? And what your purpose is. To open an account, you would need to go in person. Sometimes you could do it online. If you've never opened up a bank account, I would definitely suggest going in person. You would need to bring 2 forms of identification, a picture identification, a social security number if you have something like that, and then usually some money to put in that account. It could be as low as $10. It could be as low as $1. It depends on the bank or credit union, how much their minimum requirement is. So that's all someone needs to do to open a bank account. You get paperwork, you fill out your application, and then once you're done, you have an account, and then there's money in that account. Questions to ask yourself so that you can kind of think about where we stand, right? When it comes to fees. Many people get worried about having a bank account because they think there's a lot of fees that are attached to it. And in many cases, there's not many fees unless we don't understand it or we don't know what kind of an account we have. So when you go to a bank or credit union, they have a lot of different types of accounts. So it's up to us to ask what would work best. Sometimes there's a monthly service fee. Many times there's not, but we would want to ask that question. So we gave some handouts to you. Hopefully, I don't know if you have them or not yet, but it goes over things and questions you might want to ask, right?
And I know I just hopped on, but we're printing more handouts for those that don't have enough because we have a lot of students today.
All right. Okay. No worries. No worries.
Everyone has the handout, and then we're getting a few more to those who don't have them.
Okay. Perfect. ATM fees, what it might cost. So if you use your debit card at an ATM, there's a fee if it's not your bank or credit union. It could be $1, it could be $3, it could be $10. So they could charge you money to take your money out. Your best bet is when you use your debit or your debit card, your ATM card, at only your bank, right? Because then you won't have to pay a fee. A big one is not a big one, but the largest of the fees and a very common fee is overdraft. NSF means non-sufficient funds, means there's not enough money in your account. So if I had $100 in my account and I wrote a check for 120, that check is not going to go through because there's not enough money in that account. And what will happen is the bank will charge me a fee because I wrote a check that I knew there wasn't enough money in that account for. Usually people do that, or they buy something, or an automatic money comes out, something. So, and then they get a fee for it. So you want to be very, very careful because they could be up to $35, sometimes more. That is why I think people get really frustrated with a bank account, because if there's a mistake, they can charge a fee that can add up. But if you made a mistake and they charged you a fee, you can call them and ask them to waive that fee. It's okay. They'll probably go ahead and do it unless you're constantly charging, bouncing checks or having not enough money in the account, right? Sometimes people get their checking account so overdrawn and confused that they just keep getting fees from everywhere. So we'll talk about ways to monitor it and strategies you can take. A stop payment request, there's a fee for that. That means that you wrote a check and now you don't have enough money to clear it if something was to happen. So you call the bank or credit union and say, don't put that check through, right? They'll charge you a fee for that too. So those are some common fees, but it's important to look at your paperwork and see and read through it or ask questions so that you have a good understanding.
Oh, if I could make a little comment, if that's okay.
Please.
I know seeing the $35 for an overdraft, it's still a large number, but from experience with my friends, there had been times where they were purchasing a larger item, not realizing that they were going to overdraft. So then they were fined for going over and spending more money that they had, and still had to pay the couple $100s worth of the item that they didn't have the money for. So it ends up being, like you kind of said, like this snowball effect where you just end up spending more and more money that you might not have at the moment. And I just know from friends, the fees are not fun for them. And
right.
So just keeping track of everything is so big.
It is. And a lot of times usually if people open up a bank account, they just get the app on your phone, which is good. It's good because it helps you keep track of it so you can see what's on it. But sometimes something might not go through quick enough and we didn't write it down or we forgot about it. And then we think we can spend that money. And it happens all the time. It's happened to me. I've done it. And then you're like, uh-oh, I didn't really have that money. And then you get a fee for it. And that's sometimes I think why people get really frustrated with banks. And then if they get too many fees, I know people might just close out their account or stop using their account. And then they try to open up another one somewhere and they can't because they have an overdraft. There's a check systems, which is in the handouts. I mean, there's options. I mean, we don't want someone not to have a bank account because it does, especially if there's financial goals you're trying to reach, because it does help you build wealth. It helps you have a system to keep things safe and on track. Truly is a benefit. But at the same time, if someone's not able to open an account because of mistakes that were made in the past, there are options. Sometimes places have like second chance checking accounts or other things they can do. So we'll make sure we talk about that too. Another thing is if we're working, right, and we have an income coming through and we have a bank account, your best option is to have your money directly deposited. That means the money goes right in your bank account, so you don't have to go to a bank. Like, that's typically how people do it, and then go to a bank, get a check, cash it every week. That's how it used to be years and years ago. You just would get your money, you go to the bank every week, cash your check. This way, it's not now. You just have money directly deposited. It's been that way for a long time. But sometimes, if you don't want direct deposit, depending on the kind of bank account you have, they might charge you a fee for that. So there might be certain accounts that say unless you have your money directly deposited, each paycheck will charge you a fee. So that's something you might want to consider. Another fee they might charge is if you have every month you get a statement, so you can see what record the bank has of your spending to make sure things are accurate. So you have a list of that. If they send it to you in a paper form, sometimes there's a fee for that. A lot of times there isn't, but that could be a question. And it's not like you'll get a bill for the fee. The fee is just going to come out of the money you have in that account. And sometimes that fee could throw off your bank account and you're like, uh-oh. So something to keep track of. Sometimes certain accounts will have a low balance fee. That means if I have a certain amount of money in my account, if I don't have a certain amount of money in my account, they'll charge me a fee for it, which is kind of weird, but it's not all the time, but it has happened. So that's a question. Is there a fee for paper statements? Is there a fee if I don't have direct deposit? Is there a fee if my balance gets to like a low amount, which I think is crazy, but that does happen. Like my son had one where $50, if he had less than $50, they charged him $5 a month. He didn't know. He didn't even think about it. He didn't have a lot of money in his account. And all of a sudden he thought he had $50 or $60 or whatever it was. And he had like 10. And I'm like, what? It's because they kept taking his money out for fees. Other fees for a money order, maybe, depending, or cashier's check. So a money order or cashier's check is when you take cash to the bank or credit union, and instead of writing a check, you give them the money and then they give you a money order. So it looks like a check, you still have to sign it. A cashier's check is very similar to that. Sometimes there's a fee, so a lot of times there isn't if you have a bank account there, right? But those are questions we want to ask when we're opening up a bank account. Any questions so far? Okay. So how to use the bank account to best benefit us, right? To reach our goals. Well, first of all, we have to get ourselves familiar with all the different terms. So the lingo, that means just like the different like names they call things. An account is the bank's record of our money, right? And your record of your money. So if you have a bank account, it's a record of what money we have available. A withdrawal is when we take money out of our account. A deposit is when we put money into our account, like a check or cash or something like that. A transaction is anytime money goes in or out, or if we use our debit card to make a purchase or buy something, right? Those are all transactions. So you might see that term. A check register is where we keep track of our activity. A lot of people don't use the check registers anymore. I would say if you have never had a bank account, it's really good to use a check register because it helps you keep track of where your money is going. Something, even if we're not writing checks, even if I use my debit card at, the gas station or at Wegmans or at Walmart, right? It's just all that you're doing is writing down all of the transactions so that you keep track of what's going on. People don't always do that because they can get it really quick off of their app, which I guess is okay, but it really, sometimes people could make a mistake and something doesn't clear quick enough. And when I say clear, it means go through the bank quick enough, and it can throw us off. So you might want to look at your bank account and say, okay, even though I know that I wrote a check for $20, it looks like I have, or I bought something with my debit card for $20, it looks like I have $60 left, but I only really have 40. So keeping track of it somewhere is a good thing, and it's a good habit because it helps you figure out how much money you're spending, and it might help us not spend as much if we don't need to. Reconciling, I don't know if anybody wants to go into accounting or whatnot, but it means that we figure out the differences between our record, the check register is like our record of money, and the bank statement. Sometimes there could be an error on there we don't even realize, but reconciling means when the bank statement comes in, we check everything to make sure that it's accurate. Okay. So just to kind of reiterate this and go over it again, a bank is a place where we keep our money. A credit union is also a place where we keep our money. So there are some differences between a bank and a credit union, but they're basically both places where we can keep our money. It really depends on what you're looking for in an account. So that's why we kind of went over some questions to ask, some fees they might charge. If you're looking to borrow in the future, like a mortgage, see what's available. So we deposit money into a bank for safekeeping. So again, when we deposit, it means we're putting money into the bank. There it goes, it's in the bank, and they keep it for us. Banks, like I said, will pay us interest for keeping our money in like a savings account, right? So not a very, very lot. They don't pay a lot, but let's just pretend. So interest is what the bank pays us for letting them hold your money. So if I had $100 and I kept it in the bank for 1 year, they pay me 2%. At the end of the year, I'll have $102. So it's not that much, but it would be if we had more money. So I just want to explain that. After we deposit money in the bank, we could pay our bills. So if I get a paycheck, it could be directly deposited. It'll go into the bank, and then I get money, and I can pay the bills that I need to pay. So that could be RG&E, that could be rent, of course, mortgage, phone bill, stuff like that, groceries. So, but that's not a bill, but then that helps us so that we can make sure our bills are paid better. Because it's, if we have cash and we just go to the bank to pay a mortgage or even paying your rent with cash, it can, if you don't get a receipt or proof that you've paid it, someone could say you never paid it and try to charge you for it again. But if you pay it with like a check and you keep track of it, you have proof that it was paid. So just something to think about. After we deposit money in the bank, we can take money out for spending if we need to, once we have it budgeted out. And that again is a withdrawal. So we put money in, take money out. So banks and credit unions. So here's two examples. This is just M&T Bank, and we're just using that because it was just an example of one. They're usually bigger companies, and they have a lot of different products. So when I say product, I might mean type of account or loans or things like that. Credit unions, at a bank you might find all throughout the state of New York, or even in other states, or even throughout our country, right? Different banks all over the place. Credit unions are usually just local to our area, right? They might, I mean, they're all different areas, but they're not quite as big as banks. And it would serve like a member. You'd be a member versus a customer. There's a little bit of differences. They're both places where we can keep our money. They're both places where we can borrow, but you have to go with what's convenient for you, what you're comfortable with. Ask those same questions about fees and just figure out where we're comfortable. So one question people ask me a lot, especially when I'm working with younger groups, is that if the bank was to, get robbed or go get bought out by someone or not be in business anymore, do I lose my money that I have in that bank account? And no, you wouldn't. You would not lose it, because banks and credit unions both have insurance, and it pays us if our money is lost. Banks have what's called an FDIC, which is the Federal Deposit Insurance Corporation. This protects us. It protects the bank. They have to have this so that if something was ever to happen, our money is still safe. Credit unions have the same thing. It's just under a different area. It's called National Credit Union Administration, NCUA. So again, our money is protected with both because there's insurance that's involved that helps us protect money if something was to happen to it, right? Or at the bank or whatnot, or credit union. So it pays us if our money is lost. So here's just a quick example, right? So where's the money? There's the bank. They pay us. I know that's kind of silly, but I just want to show you like how it works. So like I stated before, an account is the bank's record of our money, and you can look at your account to see how much money you have anytime. So there's different ways you can keep track of it, which is very important, because if we don't keep track, it can get real bad real quick. There's going to be fees, all kinds of things that can get us overwhelmed, that that can cause us to not want to have a bank account. So the different ways you could do it, we could do all of them. You could do looking at your statement every month. A lot of people don't do that anymore, but it's important to keep track of that statement. You can go online and you can look at your bank account online. I mean, that's something you want to ask your bank or credit union if they offer. Most of them do offer it. And that's where you would get a username and a password, which you don't share with anyone. And you can go and you can see everything that you bought and how much money you have and all of that. People should be, you could look at your account every single day. You can still keep track and look at everything else, but just to make sure, because sometimes there's little things that can come out of our bank account, little fees, and we don't realize it. And if we don't realize it, it can keep coming out. Sometimes people will sign up for like a trial membership somewhere, and they say no payments for 3 months. And then after that 3 months, if you don't cancel it, then money comes out. That happens all the time, right? And we don't know unless we keep an eye on it. Another way is putting an application on your phone for the bank, and then you can keep track of what you have going on that way. Be careful, like where you're using your account, make sure that, people don't have access to it, because that's really personal information. You can also go in person and see exactly how much money you have in the account, or sit down with someone to kind of review what your statements. I don't know how often that's done, but that is something that can be done. They can print out a statement right there for you if you needed it. All right, so those are different ways we can look at our account and we can monitor our account. A checking account will let you spend money using checks. So usually people, if they write checks, you can really write a check for anything, but it's usually for, I would recommend things like rent or your mortgage. I say rent because it gives you a history so that you can show that you've paid that rent, right? Or maybe certain phone or things like that. This shows an example written at the grocery store. I wouldn't write, I mean, this is my opinion, but I would not write a check at the grocery store. But people do sometimes, but I would either use cash or like a debit card. But you could, you know, so this is an example. And then, oops, I'm sorry, this is out of this shouldn't be here, but this is just an example of a savings account. I think we did this slide already. So a debit card or an ATM card, usually I think it's one and the same now, is what they give you when you open up an account and you can use it to take money to buy things with. You can buy things online, you can buy things in person. The money will come right out of your bank account. So it's good because it's convenient, right? And you would know if it's a debit, usually we'll say debit or check card sometimes right on it. But you got to be careful because you could use it a lot. And if we don't keep track of it, we can spend more money than we have, and then we could get charged a fee. And it happened. And charged a fee means they take the money right out of your account. And now you're even lower than what you began with. So happens all the time. There are all kinds of mistakes we could make, but we got to really be careful to keep track of it. Banks and credit unions also offer loans. So a loan is when we borrow money for something we want. And basically, so say it's a car loan. You have to have some kind of a bank account. You usually have to have some kind of an income or savings to get approved for a loan. That's a whole nother workshop, but I'll just introduce it. You have money. Whoops. Wait a minute, where did it go? Oh, it's not going to go through. All right, so the bank gives us money. Sorry. And then we buy the car with it, and then we pay the bank back in payments or credit union. Okay, so that's something else that a bank or credit union can do besides just holding our money. Sometimes they can also give credit cards. I don't want you to get a credit card if you don't need one, please. Right now, depending on our goals or where we stand, that's something that maybe we just do over time. But I just want to show you that that's also that. So a credit card is not the same as a debit card. A credit card is also, it's a plastic card, and you can buy things on it. You could borrow the money and pay it back later. But there's a lot of interest and fees if we don't pay it off within like a month. But bank and credit unions do offer these. This is a check register. So this is where you could keep, sorry, it's in a weird spot. You could keep track of all of your transactions. So you see it's got the check number, like if you're writing a check. If it's not a check, you can also put, like, you know, if it was from your debit card, the date of when you did it. The 3 is the description, like what it was for. Payment or debit. So that might mean it was a check, or I used my debit card. That means money coming out. Fee. So if I went and took a money out of the ATM, $20, and it wasn't my bank's ATM, there might be $1 or $2 for a fee. I can't forget that, because people forget that all the time, and their account can go, you know, negative. Deposit, meaning if I put money in my account, you know how that works. And then the balance. So there's all these little areas here. It's a little register, so you could keep track of what money you have. So in this example, if I deposited, I put money in $300, you put the date, deposit, opening deposit, how much money you have, and then up here, and then so you know, okay, I look at my account, I got $300 available, right? But then if I went out and I spent money, I gotta do it. So if we do, I gotta keep track of it. So if I wrote a check, it has to be filled out the same way each time. You put the date in, who you're paying money to, how much it's going to be, and then in numbers, and then you write it out. The memo section, maybe if it's for something specific you want to put in there, and then you sign it. Right? So then this is what it would look like. You do this, Put your check number. Oops, I'm sorry. I can't see it. Your name, your address is up here. The check number, usually if you do the first check, it'll start number 1. These things over here are the codes for the bank. That it's usually got your name and the branch, and then the routing number is like all on the very bottom. There's a bunch of numbers, and a routing number means it's the bank's special number. So that if you have to buy, use that information, like your bank account number or whatnot, the routing number is part of that. And this might be getting into the weeds just a little bit. So if I want to write a check, you put the date on it, you pay who you're writing it to, you put the numbers here. You write it out here, what it's for, and then you sign it. So if we're writing a check, that's how you would do that. And then you got to keep track of it in your check register. So that was check number 105. See how, if I go back right there, right? 105, the date, Supermart, this is what you spent. Then you subtract it. So then instead of having 300, you have 270. And a lot of people don't do this. They just they keep track of it, but it really is a good thing to do. So you know how much money you have to record it. If I put money in, you usually have to fill out a deposit slip at the bank. Making a deposit is putting money in. So it would look like this. You have them in the back of your checkbook. There's deposit slips. Or if you go into a bank, you can get one online. Or I'm sorry, you could get one in person. So you would put the date, how much you're depositing, just carry it down depending on how much it is. And then you give that with the check, and then you keep record of that. Sorry, there's a couple here that you didn't see. Then you keep record of that so you know how much money you really have. So you keep track of it here. $30, and then you add it in. And that's all. You just add and subtract so that you know how much. Oops. And then there's another one here. And then you got to keep track of it. It's a little complicated. I knew it would. I'm sorry. But you just this is just showing you how to keep track of everything so that you know how much money you have, so that you don't get fees and you don't overspend what you have, because that could lead to a not great account and people can get really overwhelmed with managing it. If there's any monthly fees, we got to add those in too. But usually there's not. So if we have to reconcile, that means I want to look at all my records compared to the records that the bank has. When they send you your statement, you can look at it, and compare it to see where your differences are. We put money in, there's that check, there's your withdrawal, and make sure it all adds up to be the same amount of money. Right? And then here's another where reconcile, just to make sure things are where they need to be. Just keeps track of everything. You put your balance, the number, the amount, and then you just keep going so that you know what you have available. Okay, so there's so much to talk about when it comes to opening a bank. It's hard to figure out like where to start and where to end. So I hope I didn't give too much information. I mean, the main thing is going to a bank or credit union you're comfortable with, understanding if there's fees that are involved, asking the questions, and keeping track of the way that's going to work best for you, whether it's online or whether it's manually. It's whatever's going to work best, because having a bank account definitely improves our wealth. It's a good, safe place to keep our money, but a lot of times people if they don't keep track of it or hadn't had that good record of it, they might not want it anymore. And that's, something we want to try to overcome. So if people do need help at our agency, Consumer Credit Counseling Service, we are nonprofits, and we offer counseling sessions. And we are taking sessions Monday through Thursday from 8 until 8, Fridays from 8 until 5. At this time, they're still doing financial counseling sessions over the phone. So people call us if they feel overwhelmed with managing their money, or they need guidance on ways to maybe manage their bank account, or they start to get overwhelmed with debt, or maybe there's goals they're trying to reach. So we really want to provide that support and the guidance. There's no cost to talk to someone. It's individualized, confidential, comforting, and motivating. We do budget counseling, credit counseling, and what that means is we help people look at their credit. So if people are in a situation where they want to fix their credit or pay off debt, we have programs to help them do that by helping them reduce their interest rates, consolidating. We offer first-time home buyer education, foreclosure prevention counseling if someone is in a situation where they're not able to meet their payments on their mortgage and they're trying to figure out how to stay in the house. There are options to help. We also do reverse mortgage counseling, which probably isn't going to be an interest, but you have to be at least 62 years old rather. And it's a type of mortgage. So prior to getting that mortgage, we counsel someone to make sure they understand it, as well as bankruptcy. So if someone is filing bankruptcy, they must do a credit counseling session prior to that, or a budget counseling session to help them proceed. Okay, sessions are booked for an hour, and we just really want to help people figure out solutions in looking at their goals, their budget numbers. And then another program we have, which I think is going to be very, very helpful, is a financial empowerment counseling. So this is free one-on-one financial counseling. As many times as you need it, you can work with the same person over and over, and they help you figure out, goals. So like, say you want to open up a bank account, but you want to understand the process first, or maybe you have a bank account, but you're having a hard time managing it. A financial empowerment counseling or counselor can help you with understanding that and getting on track. Savings, spending, banking, debt, credit, helping you get established. If people want to purchase a home and they're trying to figure out the beginning stages of what they need to do prior to that, that is where you can meet with someone to help you retain those goals, which is a very nice complement to what you're doing now. Taking the time to educate yourself, going back to school, taking the time to figure out what we want to do. Having a financial empowerment counselor alongside you could be a very helpful person to reach the goals that you're trying to reach. Okay. So with that, here is our information. You can always reach us. There should be all of our contact information on the materials we sent out. You can call if you have questions. Go to our website. If you need help getting connected, you can let your teacher know. I'm sure we can help you. They can always call me if you need to get connected to a counselor to help you. So at that, I think we'll wrap it up. But I wanted to see, and I'm trying to keep a good pace for everyone. So I apologize if I went too slow or too fast. I'm trying to stay right in the middle. But if there's anything you can do to support that, please feel free to touch base with me. There is an evaluation, and if you wouldn't mind completing that to the best of your ability. If you'd like to get in touch with someone from our office, there's a little box you can check. That'll come back to me, and then we'll make sure someone calls you if you want them to.
Yes, and then just a reminder, anybody here at Oasis can help contact them as well if you guys need help. Do not be worried about that. And I guess my little tidbit at the end would be, I think people hear financial and they think like it has to do with just budgeting, and it's not just that. Like, our whole world revolves around money, unfortunately. So even if you want to change apartments and you need help with something like that, and you say, oh no, this one's $100 more, it can't hurt to go see a counselor. And like, the way I kind of think of it as a game. You want to do the best, you want to be the best, so it's okay. You're not seeking help because you're incapable. You're seeking help because someone is a professional at this, and like, they can tell you things that you don't know. I mean, I even learned so much from this presentation. But like, that's just how it is. So I encourage everybody to go for anything, whether it's school, groceries, vacation. Maybe you want to do a little weekend trip once a month. anything. And then it could also be bigger scale, like a house, you know, a car, things like that. But there's no harm in meeting with somebody, you know, it can only help you. So why not do it? You know, if it's an hour of your time, it's an hour. And if it's over the phone, there you go. Don't have to go anywhere.
I agree. Thank you so much for that. It really is. And we're just happy to be able to be here to talk about the services that we help provide or just offer education together, because people do need help with managing finances. It doesn't mean we're bad at it or have to be in a bad position, but you know how many times we've heard, I wish I knew that before? Well, this is our opportunity to know. So we're here if you need that support, guidance, education, whatever it is.
Thank you very much. And like I said, if anyone has any questions, reach out to your teachers or myself, and we have all the phone numbers and emails, so we can help you reach out.
All right. Perfect, guys. Thank you so much. You have a wonderful day. It was great to meet you virtually. I can see you. So have a wonderful day and let me know if you need anything.
Perfect. Well, thank you very much. And thank you everyone for attending today.
Thank you,
Have a
guys.
great
Have a great day.